Could robotics become the most profitable investment of the next decade? With each new advancement in automation and AI, multi-billion-dollar opportunities are being created that few people are paying attention to. And I'm not just making that up. ARK Invest, the fund run by Cathie Wood, has released its Big Ideas 2025 report, and the conclusion is clear. The companies leading in robotics today could become the major winners of this decade. But what does this mean in terms of numbers? According to their estimates, global investment in robotics could exceed $26 trillion, impacting key sectors like industrial automation, home robotics, and AI applied to work. So today, let's explore what's happening in this revolution. What sectors are set to explode, and most importantly, which stocks and ETFs could become billion-dollar opportunities in the coming years. This isn't just some distant prediction, it's already happening. So if you want to know who could lead the future of robotics and how you can take advantage of it, stick around until the end of the video. And as always, if you're enjoying this content, don't forget to hit the like button, subscribe to our channel for more videos, and share it with someone who might find this interesting. What are the prospects for the robotics sector? Robotics has gone from a futuristic and somewhat apocalyptic vision to a tangible reality that's transforming entire industries. But the real question is, where will this revolution take us? To answer that, we'll examine three key factors that justify investing in this booming sector. Exponential growth. The revolution we've already seen has been exponential, so where does the future take us? From industrial automation to logistics, robotics has radically transformed global productivity. Just as the introduction of washing machines saved us 87% of labour time, or vehicle assembly lines saved 88%, today the most automated assembly lines, such as those led by Amazon's Kiva robots, have reduced order processing time by 78%. It's simply what happens whenever there's a productivity revolution. More technology is introduced into the process, and the evolution continues. But we're on the brink of an even more disruptive shift: humanoid robots and generalized automation. While robots have been static and highly specialized up until now, the next generation, like Tesla Optimus and Boston Dynamics Atlas, will revolutionize complex tasks and environments designed for humans. Sectors like housework, manufacturing, and logistics will be entirely transformed. And this is just the beginning. The economic impact will be enormous. In fact, ARK estimates that robotics could become a $26 trillion global opportunity. Homo roboticus? The future doesn't just see robots in factories and warehouses. They'll be in every corner of everyday life. What happens when we integrate robots into everyday tasks? Hyper-automation will change the structure of work by freeing people from repetitive tasks and optimizing productivity, both in businesses and homes. For example, it's estimated that we spend around 2.3 hours a day on unpaid household chores, things like cooking, cleaning, and laundry. Over time, domestic cyborgs will absorb much of this workload, transforming this time into economic opportunities. In fact, domestic robots could be worth $92 billion in the US alone. On the business side, it will mean labour substitution and improved business efficiency, a trend already underway in large logistics chains. In the US, the average cost of a worker is $46 per hour, including benefits. That adds up to almost $1 million over 10 years. As the cost of robots continues to drop, their adoption will become unstoppable, leading to greater efficiency and cost reductions across many industries. This transformation is already visible in mega-cap companies and will soon impact smaller and medium-sized businesses, which still have huge potential for automation. In fact, the Big Ideas report suggests that this could be the segment with the greatest potential for adoption. But it also raises a much more troubling question. What will work mean in the digital era? Industry growth projections. Okay, but beyond robots in our everyday lives and any technological revolution, what does the global growth opportunity look like? Let me tell you. Robotics is set to be a highly profitable sector. According to ARK Invest, the adoption of robots could increase global manufacturing GDP by up to $32 trillion by 2030, boosting productivity by as much as 400% in some cases. I know these figures might seem far-fetched, but subsectors like 3D printing are advancing alongside robotics, growing at 40% per year. In this particular case, 3D printing is expected to reach $180 billion by 2030. In short, this is just a continuation of what we've always done. Looking back at history, automation has been a driving force behind every major industrial revolution. Now, we could be facing a new era, one where robots don't just facilitate production, but are integral to our everyday lives. So the real question isn't whether robotics will transform the economy, but rather how fast it will do so and who will lead that transformation. With multi-billion-dollar opportunities at stake and unprecedented technological breakthroughs, investing in robotics is clearly an investment into the future. So how do you invest in robotics? As always, the key is to find companies that are either well-established or disruptive in such an emerging sector. Which players could lead the robotics revolution? Let's take a look at 3 examples, including an ETF that has performed exceptionally well in recent years. And before we get started, as always, I just want to mention that I'm not a professional financial advisor. My aim is to share data-backed analysis to help you make informed decisions. But this is just an opinion, and I do encourage you to do your own research before investing. Tesla. No discussion about robotics and AI would be complete without mentioning Tesla. It's one of Cathie Wood's favourite companies, and even more so now with Elon Musk taking charge of the US Department of Government Efficiency. As we know, Tesla leads the electric vehicle and renewable energy markets. But what I want to focus on today is Tesla's commitment to autonomous driving, particularly its robotaxi project. Elon Musk has promised significant progress by 2025, including up to 1 million vehicles operating as autonomous robotaxis in various US cities. Just imagine the passive income potential that this could create. Given Tesla's financial results, expectations are high, even after a rocky few years. Despite challenges, including a 50% drop in EBIT and earnings per share, largely due to competition from Chinese company BYD, Tesla's share price has increased by 50% over the past 4 months. That said, be cautious. With a PE ratio over 160 times, a pullback wouldn't be out of the equation. If you believe in Musk's vision and want to buy Tesla shares, you will find links to brokers with competitive commissions in the video description below. Teradyne. Teradyne is another key player in robotics, providing automation and automated testing solutions. Founded in 1960 and based in Massachusetts, it expanded into robotics through strategic acquisitions, including companies like Universal Robots and Mobile Industrial Robots. Teradyne has invested over $700 million in advanced robotics and automation, deploying over 80,000 robotic systems globally. These investments have led to innovative solutions in collaborative and mobile robotics, optimizing manufacturing processes for its customers. Financially, Teradyne is more stable. After a dip in operating margins, it returned to growth last year with a 5% increase, and it's projected to grow by 30% this year thanks to its patents and robotic systems. They've also introduced a dividend policy, though it's currently at a modest 0.5%. However, there's potential for future growth in dividends. Now, let's look at an ETF that focuses on AI and robotics. ARK Artificial Intelligence and Robotics UCITS ETF. This thematic ETF provides exposure to global companies involved in developing AI and robotics technologies. It tracks the Selective Artificial Intelligence and Robotics Index, which includes top companies in automation, machine learning, and advanced robotics. Notable holdings include Tesla and Teradyne, which together make up about 15% of the fund. Though it has a relatively high TER of 0.75%, compared to some other index funds, it's managed by Cathie Wood's ARK Invest, which brings a certain level of credibility. This ETF has already achieved an impressive return of around 70% in just 7 to 8 months. Do you know of other companies or ETFs in robotics? Feel free to leave them in the comments below. Thanks for watching, and I will see you in the next video.